So I'm in this broken wing butterfly call spread that I'm in from a few days ago. It expires today and it looks pretty good. The price is trading way up here at 41.80 at the time of this video, and my break even point's way down here. So the market would really have to turn lower for this to be a losing trade. But as the market closed yesterday, though, it was not trading up here. It was trading a little bit lower, and the market's been so overbought that I kind of wanted to make sure I protected this one. So I found a way to protect this very cheaply, and I want to kind of put this in reference with the max gain and loss. So the max loss at this point is anything below, we'll call it 41.15 would be that max loss, which is $320. So if the market turned lower or move over here, I would lose the $320, everything below this point. So that's the max loss. That's the debit I paid for this call fly. So obviously my max profit zone is in here. I'm not going to achieve that. That's very rare that you can nail that one. And then we have gains of $180 up here. So what I did was I wanted to take a little bit of my gains to reduce the risk from this side. So let's jump into the option chain. Here are the strikes of the broken wing call fly. It's a 41.15. I bought one of those, sold two 41.25s, and bought a 41.30. The next step was to go below, because remember, anything below 41.15, this is my max loss area. So what I did is I sold a bear call spread that was in the money down here. That is an in the money call spread. I was able to sell this call spread for like 400 or 470 or something like that. So my max loss on the call spread alone is only 30 cents. So let's go back to here. What I'm going to do is I'm going to take this off and I'm going to just put the bear call spread in there. So here's my max loss on the call spread. Again, I sold it way in the money. I sold it for a credit of $470, but if it doesn't go down here, I'm going to lose my max loss, which in this case is $30. So when you add these two trades together, what you end up with is this. So instead of $180 being able to be made at these current levels, it is now $150 because I used 30 cents of my $150 gain to basically erase all losses, anything below, we'll call it 41.05 or so. I still have a little bit of a dead zone, a valley of death here, which is a little bit more. When I take this off, remember anything below 41.15 was max loss of 320. Well, that 30 cents I used is going to be added to this if it lands in here, because the max the bear call spread was here at 41.10, 41.05, and then the butterfly started at 41.15. So this is something I did. It's a personal choice to say, hey, you know what? I want to lock in these gains. I want to minimize the chance of loss, minimize the risk, and I'm willing to give up a little bit of my profit just in case the market were to turn lower. Wanted to share with you how I protected that trade, and we'll see you at the next video.